Hey everyone, welcome back to Corporate Decoder, where we decode the confusing world of business filings. Today we're looking at 60 Degrees Pharmaceuticals and a filing that might just be a game changer for them, or at least a significant step. So what's the big news? Well, 60 Degrees Pharmaceuticals Inc. is reporting on a big deal they made selling stock and warrants. Think of it as them raising a bunch of cash by selling pieces of their company to investors. This is a pretty standard move for companies looking to fund their operations and growth. They're calling it a follow-on offering, which means they've already had an initial public offering or IPO where they first sold shares to the public and now they're selling more. They sold shares of their common stock, which is basically like selling small ownership pieces of the company itself. They also sold warrants. Now, warrants are like options to buy stock later at a set price. It's a way to make the deal more attractive to investors, as they can potentially make more money if the stock price goes up. The price for these shares and the accompanying warrants was about $1.80. For those that bought a pre-funded warrant, which is a bit different because it's already paid for, the price was just a penny less at $1.99. This whole deal, the offering, was completed on July 16th. And they managed to raise a pretty significant amount of money, around $5 million. Now, that's before they paid fees and other expenses related to making this sale happen. What are they going to do with all this new cash? They're saying it's for general corporate purposes, and specifically mentioned working capital. That means they'll use it for the day-to-day running of the business, like paying salaries, covering expenses, and generally keeping the lights on. It's a pretty broad statement, but it pretty much means they need cash to operate and maybe move forward with their business plans. This offering was done under a registration statement, which is basically a big document they filed with the Securities and Exchange Commission, or SEC, to get permission to sell these securities legally. The SEC declared this statement effective on July 15th, which is the day before the offering really got going. They've also included copies of the forms of the different types of warrants and the agreement that made this all happen as exhibits to this report. These are important documents that lay out the exact terms of what was sold. As part of this announcement, they also issued a press release on July 15th, letting everyone know about the pricing of this offering, and then another one on July 16th to announce that the offering had officially closed. This two-step announcement process is quite common. Now, an interesting detail here is that 60 Degrees Pharmaceuticals is identifying itself as an emerging growth company. This is a status given to newer companies, and it allows them to have some flexibility with certain reporting requirements under a law called the Jobs Act. It means they can delay adopting new accounting standards, which essentially gives them more time to prepare their financial reporting. As with most of these filings, there's a section on forward-looking statements. This is basically a disclaimer. The company is telling you that when they talk about future plans or expectations, these are just projections based on what they think will happen. They can't guarantee these things will actually occur, and actual results could be very different. It's standard legal language to protect themselves from potential lawsuits if their future plans don't pan out. So what's the story here? 60 Degrees Pharmaceuticals is actively raising capital to fund its operations. They've successfully sold stock and warrants, bringing in $5 million. This is a crucial step for any company, especially in the pharmaceutical sector, where research, development, and regulatory processes are incredibly expensive. Raising this capital shows that investors have some confidence in the company's future prospects. However, the mention of general corporate purposes is not very specific. Ideally, you'd want to see a clearer plan for how this money will be used to drive growth or achieve specific milestones. The fact that they are an emerging growth company suggests they are still in a relatively early stage of development and may not have the same long-term financial stability as more established companies. We don't have specific financial performance numbers in this particular filing, which is focused on the details of this financing event. To get a true picture of their financial health, we'd need to look at their other reports like their quarterly 10Q or annual 10K filings, which do contain detailed financial statements. From what we can see here, this is a positive step for 60 Degrees Pharmaceuticals as it provides them with much needed funds. The key will be how effectively they deploy this capital. Given the high-stakes nature of the pharmaceutical industry, where breakthroughs can lead to massive rewards but failures can be devastating, managing these funds wisely is paramount. What's your take on this fundraising round? Does it signal strong future growth for 60 Degrees Pharmaceuticals, or is it just a band-aid for ongoing operational costs? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe to Corporate Decoder for more in-depth looks at company filings. Also, we have a fantastic community over on Discord, so swing by and join the conversation. You'll find the link right in the description. Thanks for watching, and I'll see you on the next one.